to take a look at the market for today, February 18th, and it was overall a positive day, not dramatically so. You had the S&P and the NASDAQ up about 0.25%. The Dow was roughly flat. Small caps certainly did the best overall. So if you own some small caps, you probably did better than the broader market. Even the big names, not a whole lot of movers, to be honest with you. Apple, Nvidia, Microsoft, those were all roughly flat, up or down less than 0.5%. Meta was the only one down big, 2.76%. And that was really on after 19 straight days of gains. So it was due for a bit of a pullback. Broadcom was down about 2% as well. You also had Amazon down about 1%. Tesla was down about 0.5%. But that was weakness. There was definitely weakness overall in the bigger names. And as you go down into the smaller names, that's where you saw the strength. Now, how much of it has to do with Trump coming out and talking about reciprocal tariffs, reiterating that, also saying that tariffs will go up over time. So certainly banging the tariff drum. And maybe those bigger names, the market didn't like that for those bigger names overall. Now, on the economic front, the New York Fed's February Empire Manufacturing Index, that rose to 5.7%. Positive 5.7%. And that was above what the consensus estimate was, negative 0.5. Okay. And in January, it was negative 12.6. So the consensus was that it was going to get better, but it got a lot better, at least on, new orders. New orders were notably higher. So some optimism there. However, if you look at prices paid, for example, prices paid index climbed to the highest level in 2 years. So while that's good for demand, it's also not good for inflation. And we know we had the relatively poor inflation print over the last couple of weeks. They also had respondents' optimism around the economy, and that actually declined sharply, though. Capital spending was down, and they think supply availability is going to contract. And once again, that is inflationary. It's not just about demand, it's also about supply. And if supply contracts, just like it did during COVID, that also fuels the flames of inflation. And then you look at the NAHB Home Builders Index. That dropped to 42 from 46.5 and 47, or the consensus could be 46.5. So it was supposed to be down slightly from 47 in January, went all the way down to 42. That's because you see mortgage rates hanging around 7%. And there's just not a whole lot of buyer traffic. Also, uncertainty around tariffs. A lot of what is used to build homes is imported. Think of wood from Canada, along with cabinets and faucets and all these things that are usually imported from overseas. And so there's a lot of these home builders that are looking more pessimistic around their business going forward. Not just on the demand side due to higher interest rates, but also on the supply side, being able to build homes at a level that is still profitable, right? And then expectations for future sales volume down to the lowest level since 2023, December of 2023. So things on the economic front today weren't that hot. Besides the manufacturing index, that was better than expected, but it really fueled the flames of potentially inflation. And then there's definitely a downbeat sentiment around supply of both manufactured goods as well as homes. And so very interesting to see what happens in the market today with those small caps stronger, but the large caps definitely on the weak side. And we head into the FOMC meeting minutes tomorrow. That will be important to see, what are they really talking about inside these meetings? A little more color on, besides just the standard FOMC report, what's the color around the discussions and how that might impact future policies. So that'll be big and could be a market mover tomorrow. But that was today's market for February 18th, 2025.